Hello traders, you're welcome to this video. In this video, we are going to be looking at a strategy that combines the MACD and the Ichimoku cloud. Okay, so we're just going to be breaking down the strategy. We're going to be looking at how indicators work and how to combine them for effective trading strategy. Okay, so first of all, the MACD is called the moving average convergence divergence. Okay, it's a momentum indicator that shows the relationship between two moving averages of a security's price. It consists of three components. We're just going to be adding it to our chart. Consists of the MACD line, consists of the signal lines, consists of the histogram. Okay. Now, when the MACD line crosses above the zero line, it indicates bullish momentum. When the MACD line crosses below the zero line, it indicates bearish momentum. Okay, and then you can also use the MACD to identify divergence. For example, if the price is making new highs or lows and not confirmed by the MACD, it can signal a potential reversal. Now, as for the Ichimoku, we're also going to be adding that to our chart. I'm going to be adding the Ichimoku to our chart. Okay, the Ichimoku is a comprehensive indicator that provides information about support and resistance levels, trend direction, and momentum. So it consists of 5 lines, as you can see: 1, 2, 3, 4, 5. Okay, it consists of 5 lines. We have the Tenkan Sen, which is the conversion line. Let us just open the indicator so we can look at it closely. The Tenkan Sen is the conversion line, is the red line on the chart, and then the average of the highest high and the lowest low over the last 9 periods is what forms the Tenkan Sen. And as for the Kijun Sen, which is the baseline, is the average of the highest high and the lowest low over the last 26 periods that forms the Kijun Sen. And as for the Senko Span A, which is the up Kumo, right? The up Kumo, it's the average of the Tenkan Sen and Kijun Sen plotted 26 periods into the future. And then we have the Senkan Span B, or the down Kumo, which is the average of the highest high and the lowest low over the last 52 periods, also plotted 26 periods into the future. Now we have the Chikou Span, which is the closing price plotted 26 periods into the past. Now, how does it work? How does this indicator work? It helps in trend identification. If the price is above the cloud, the Ichimoku cloud, the trend is bullish. However, the price is below it, the trend is bearish. Now, so in terms of support and resistance, the cloud acts as support and resistance. As we can see here, the price was bouncing off the cloud. In fact, we even had a hammer, an inverse hammer form around here, okay, or a Gravestone Doji form around here. It's a bearish candlestick pattern. And then we also can use the Senkan Span A and Senkan Span B, which forms the edges of the cloud. You can see Senkan Span A and B form the edges of the cloud. The Kumo cloud is made up of that, the up Kumo and the down Kumo, the Senkan Span A and Senkan Span B. They act as support and resistance levels. Now, in terms of crossover, bullish and bearish signals can occur when the Tenkan Sen, which is the red line, when the Tenkan Sen crosses above or below the Kijun Sen. Remember that the Kijun Sen is the blue line. So when the Tenkan Sen crosses above the Kijun Sen, it's seen as bullish momentum or bullish signal. However, when the Tenkan Sen crosses below the Kijun Sen, it's a bearish signal. Okay, now how do these two indicators complement each other? Using the MACD and Ichimoku cloud together can provide a comprehensive trading strategy. 1. For trend confirmation, you can use the Ichimoku cloud to confirm the trend. For example, if the price is above the cloud, remember that this is the Ichimoku cloud. If the price is above the cloud, you might want to look for bullish MACD crossover signals. So when you have price trading above the Kumo cloud, just look for a bullish crossover on the MACD. That's going to confirm the trend. So we're of course not entering a buy around here because we had a bullish crossover and we have price trading above the Kumo cloud. And then the MACD can also confirm momentum within that trend. If the MACD is rising while the price is above the cloud, so long as the price remains above the cloud and you have the MACD rising, it can signal a strength to the bullish position. So you can see that if we had entered a buy somewhere around here, when we see that the MACD was still rising and price was still above the Kumo cloud, we would have considered staying in that trade until we finally had perhaps price getting into the Kumo cloud, or maybe we had MACD crossing below the zero level. Okay, because if the MACD starts to show divergence, e.g., price making new highs but MACD does not, it may be time to consider taking your profits or reducing your position size, especially if the price approaches the upper edge of the Kumo cloud, like what we can see here. When price begins to approach the up Kumo and we have the MACD beginning to decline, you can consider exiting your buy trades. Okay, so as for a sell, it's just the opposite. You have to have price trading below the Kumo cloud, and then you can wait for a bearish crossover from the MACD to confirm the signal. And as for your exits, you can consider when the MACD begins to point back upwards and climb above the zero level, or you can also just be looking out for price beginning to turn back towards the Kumo cloud. And importantly, when you have the crossover from the Tanken Sen and the Kijun Sen, it can also signal a time to exit your sell. However, because indicators are lagging, you can also consider using support and resistance levels to exit your trades. Because imagine you have entered your sell around here and exited around here, you would have made more profit than someone that had waited for the indicator to give a signal in order to exit. Imagine someone waiting for the crossover from the MACD to happen. That would have been exiting somewhere around here, or you waited for the Tenkan Sen and Kijun Sen crossover, you would have exited somewhere around here. So, but if you use support or resistance levels, you can exit even faster, okay, and save more profit. Now, basically, it's important that you regularly review your trades and analyze the effectiveness of the MACD and Ichimoku cloud signals. Combining these technical indicators with fundamental analysis and market sentiment is important to create a well-rounded trading strategy, okay? And try as much as possible to continuously educate yourself on market dynamics and adjust your approach as needed. So by effectively utilizing the MACD and Ichimoku cloud indicators, you can enhance your trading strategy, identify optimal entry and exit points, and manage your risk effectively. Note that it's important that you don't use an amount that you cannot afford to lose to trade. Okay, trading is risky, so you might always want to use an amount you can afford to lose, and make sure you practice proper risk management. Okay, you might consider risking just a maximum of 3% of your account per trade. In fact, some traders consider 3% high. You can consider using 1% per trade, or depending on your risk tolerance. Okay, but make sure that you practice good risk management. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thanks for watching. Happy trading.